What's up, everybody? It's Kenneth here. In my last video, I just gave you a little heat map of what's happening in the downtown real estate market, and you know that everybody is leaving the city and going up to the suburbs and the outer regions of the GTA. It's no surprise, not even just our Toronto, that is. I mean, there's New York, San Fran, LA. Everybody's leaving the big cities and going out to the outer regions where real estate is a lot cheaper and you get more value for your money. We get nice outdoor space like this. Those real estate markets have been booming quite a bit. So does that mean it's the end of the world for the cities? What do you do if you own downtown real estate? If you own a nice condo in the city? If you have a vacant unit? You know, there's not as much tenants out there. So if you're a tenant, first of all, it's a great time to go renegotiate your lease or find something else, or even start renting if you're living at home. And you get a great deal out there. If you're a landlord, you're lucky to get a tenant right now, a good tenant that is. So rental rates have come down anywhere from 10 to 15%, and I think it's going to come down a little bit more. If you have a vacant unit, I hope you can hold on a little bit, because I think it'll bounce back. This is just a little temporary blip. I don't think it'll last forever. I don't think we'll find a solution for COVID, and this will be all over hopefully in 6 months, who knows. But until then, if you have a vacant unit, I know it's gonna hurt to carry one or two or more mortgages depending on how many units you have. Or maybe perhaps you're thinking, maybe now's a good time to buy another property, because look, interest rates are at the all-time low. It's the lowest it's ever been, under 2%. That's crazy. That's like free money, pretty much, 1 point something. We see interest rates as low as 1.6%, and that is pretty much free money. One of my properties, 1.45 is the variable rate, 1.45%. The mortgage is about $1,700 a month. Only $400 of that is interest. The rest of it, $1,200 or so, is principal. That's insane. So I'm going to be paying it off really quickly. If I had more of those, I would gladly take it. So it's a reason to buy more real estate right now, because interest rates are a lot lower. And if you're one of these owners in the outer GTA, maybe it's a good time to reach out to your mortgage broker, get an opinion of value from your realtor, and maybe it's time to refinance your property. Because think about it, property values are high, interest rates are low, and downtown real estate's on sale right now. So why wouldn't you go buy another property? Maybe the only thing is that, yeah, you're not going to find a tenant for a little while, or if you find one, it's going to be a lower rental rate, but hey, it's costing you a lot less too. So maybe it makes sense to go buy another property. Because look, real estate's going to be a long-term game. It's not like you buy and sell them within the day, within the hour, like stocks or anything like that. It's a long-term play. You hold for a long time, and it just makes sense. I mean, there's a study that was done by the National Association of Realtors in the US, but it's kind of like a natural phenomenon. We all know this. Property owners have way higher net worth than non-property owners, right? So they say that the net worth of a property owner is 40 times that of a renter or non-property owner. So imagine you had a couple more of those. And the simplest strategy I always say is, if you have any kids that are just, newborn kids or 0 to 5 years old or whatever it might be, buy a property. Because think about it, in 25 years, if you have a 25-year amortization, that property is going to be paid off. Even if that means that you have to kick in a couple $100 a month, a few $100 a month, just to carry the place, it's almost like a forced savings plan, right? Because if you bought something now for, say, $600,000-700,000, just call it $700,000, and in 25 years, the mortgage is paid off because it's a 25-year amortization, maybe even 30-year amortization. And if you have a kid that's just born, by the time they're 25 or 30 years old, or even less than that, I mean, you don't have to pay the place completely off, but that's a big chunk of change that you're going to leave them or give them or help them out, and it's going to give them a really big head start in life, right? So with $700,000 in today's money, imagine if your parents did that for you 25 or 30 years ago. That's a pretty good move. And it doesn't really cost you anything, right? I mean, the only thing it'll cost you is a few $100 a month, or some vacancies and some turnover that you might have, which, there's some renovations that you might need to do, some paint jobs and some real estate commissions just to lease it out, marketing fees, management fees, taxes. Yeah, it could add up, but at the end of the day, the tenants are the ones that are paying for this all, and you can see why the divide is getting bigger and bigger between haves and has-nots, and it's an unfortunate thing. This virus has actually caused a big shift between the haves and have-not, because the lower wage earners are the ones that are really taking the biggest hit for closures and all that. It's unfortunate. So hopefully the government can step in and fix this. And speaking of the government, with all the programs that we're putting out there, we're somehow going to have to pay for this. The Bank of Canada can only print so much more money. And the more money that the Bank of Canada prints, it just means more inflation for the rest of us. Which means that your dollar is going to be deflate a lot, and it just makes more sense to buy more assets, right? If that's the case, because those won't deflate in value. Your dollars will deflate in value. So essentially, that'll just increase the value of the asset. So if you haven't even thought about taking advantage of this real estate market and you're kind of scared and you're thinking downtown's on sale and it's going to crash and it's the end of the city and everybody's going to move to the suburbs and all this urban sprawl, I think you better think twice about that, because it's going to get back to normal. Downtown's a great place to be. So if you haven't taken advantage of this real estate market, I think now's the time to do it. I know it's kind of scarier. I know it's easier said than done, especially if the economy feels like it's crashing and all that. But look, it's not going to last forever. We're going to find a solution for this. The whole world, entire world is united in finding this a solution to this pandemic. We'll find a vaccine. We'll find a cure for this, and it won't be a problem anymore. And then life will get back to its normal. And eventually cities will rise again. And for those of you that haven't taken action because you're waiting for a sale, you're waiting for prices to come down, well, guess what? Prices have come down. This is it. I don't think it's going to go down much more. Maybe for the next 6 months, maybe. It's hard to time the market. It's hard to time the bottom. I'm not saying to time the bottom. That's not a wise thing to do, especially if you're buying for the long run. You guys all know this. Probably time to refinance your property in the outer regions if you own a home and your values have gone up, interest rates are low, prices are cheap, and get into something. And it doesn't have to be a condo. It could be a multiplex. It could be anything you want. Pre-construction even. Actually, speaking of pre-construction, these prices aren't coming down. You know, you see average price per square foot of anywhere from $1,000 to $1,200 at the very minimum. And if everybody's doing that, there's a reason why everybody's charging that. It's not because they want to charge it, it's because their input costs are too high. Land costs too much. The materials are going up in value. The demand for construction, the demand for trades, the demand for workers, it's pretty high. So I don't see the cost of new construction coming down anytime soon. It just can't. Price is going to stay that, and that's your new supply. That's going to be your new bottom, and this is why prices will continue to go up. So if you think about pre-construction, the thing about buying pre-construction is that it makes sense if you don't have the down payment now, or if you need some time on your hands to kind of just get over all of this, right? You don't have to worry about servicing the mortgage. You can just let it appreciate over the next 4 or 5 years. You don't have to worry about finding a tenant during a pandemic. You can just go and just, put your deposit down and kind of sit back, let the builder do all the work and let the market do all the work and just ride the coattails of that, right? I think you should consider taking advantage of the real estate market right now, because look, everybody needs a place to live and it'll always be an asset. It doesn't really depreciate in value in the long run anyway. So with that, it's Kenneth. I'm signing out. Looking forward to talking to you in the next video. Thanks for listening. Thanks for watching. Don't forget to like and subscribe if you're watching this on YouTube. I'm going to be putting a lot more video content out there. I'm going to be trying to do, I know it's hard to commit to it, but a weekly video, a weekly update. It's difficult, but let's get it done. Until then, see you later.